Okay, hello. So today we're talking about US tariffs and changes that are coming into force on the 29th of August, or at least as of this point, they're coming into force on the 29th of August. Anything could happen. Just by means of a very brief agenda, we're going to talk about what is de minimis exemption, because that's what this latest executive order refers to. So the executive order that's been handed out by the Trump administration is concerning the treatment of goods going into the US that would historically have been duty free, so under that de minimis threshold or that de minimis exemption. So we'll talk a little bit about what is that. We'll talk a bit about those executive measures or executive orders and what has gotten us from April all the way to where we are today. I will touch a little bit on the administration's reasoning behind the suspension of de minimis. And then we'll talk practically about what happens as of the 29th of August and how can we adequately prepare. I'm conscious that many of you on the call today have never had to think about calculating duty or, passing on that duty to your customers, because the value or the volume of what you ship to the US has never warranted that, i.e. you've maybe been able to trade below that 800 US dollars in the past. I will touch on merchandise processing fees, but I don't want anybody to worry that isn't shipping goods over the value of $2,500, because that's when that additional fee kicks in, not before. And then we'll talk about, as UK exporters, from where we stand today, how can we adequately prepare, bearing in mind that the executive order was only delivered on the 30th of July and we're only at the 14th of August here. So what can we do at haste to make sure that we can continue supplying our US customers, whether they be business or consumers. And then I'll talk specifically about what Royal Mail and Parcel Force are doing, because obviously when we talk about de minimis or goods that would have satisfied the de minimis threshold in the past, most of those go through Royal Mail and Parcel Force, or go through postal services or postal networks, remembering that this de minimis threshold is being removed for everybody, not just the UK. So it was already removed for goods originating from China and Hong Kong, and now the administration has pushed out that measure to every trading partner that the US has globally. So what are Royal Mail and Parcel Force doing? And then we'll cover off a little bit about origin at the end, because so much of these tariffs are based on the origin of the goods that you're shipping, not the export country. So not just the fact that you've shipped them from the UK, but have they actually been made in the UK? Can we definitively categorize them as UK origin goods? So what is a de minimis exemption? Well, it's a threshold that every customs authority across the world sets for low value goods, essentially. So any goods that are valued at under that threshold are subjected to far less customs scrutiny. They don't attract any duty, and they typically go through the postal network. That's typically how they enter the US, and obviously US Postal Services do that last mile basically in the US. So the US has had historically a very high de minimis threshold at $800. There's no other country globally that matches that. There are other countries that have relatively high de minimis thresholds compared to us here in the UK, but none of them at that $800. And to be honest, I'm gobsmacked that it hasn't been addressed before now, because obviously that duty is goes towards the state, and I'm shocked that they've maybe allowed so much stuff to go in for so long under such a high threshold. But anyway, the new going on to the executive orders, that is now going to be withdrawn or suspended. How long for? We don't know. My guess is that it's not going to be forever and a day. It would make the US, I think, probably the only country globally that doesn't have a de minimis threshold. And obviously understanding that the real losers in this whole not trade war, but trade policy are US businesses and US consumers. How long can they support these inflated costs? So I think over time we will start to see either the suspension being lifted entirely, or we'll see perhaps another de minimis threshold introduced, but far, far lower than the $800 that was. So this new announcement was made on the 30th of July, and everybody's been working at haste since then to get things ready so that UK US trade flows can continue. And it takes effect from the 29th of August as it stands today. Trump, I should say President Trump. Trump sounds very disrespectful, but President Trump, he, even for this de minimis action, he has tied it back to his original reasoning behind this new trade policy. Fundamentally back to illicit drug importation, fraudulent behavior, illegal behavior, and that's jeopardizing US homeland security. So this is the kind of verbiage that was around the decision, and why the US has seen fit to remove that. In addition to the tariffs that it's already imposed on countries globally, they've now removed this ability to have goods go into the US that haven't perhaps been scrutinized as they would be if they were subject to proper customs controls and customs declarations. So from the 29th of August, what does that actually mean? So the de minimis threshold, or the de minimis treatment, just affects those goods that are under that $800 threshold. So they're typically shipped by post or by fast parcel operators. And when I talk about fast parcel operators, I'm talking about the likes of your couriers, your FedExes, your DHLs, your DPDs, and so on. So all shipments, I'll come to the postal network in a second, but all shipments going by fast parcel operators will now be subject to, full duties, basically, even if they're under that 800 threshold. The postal network will work slightly differently. So bearing in mind that not all postal services are going to be ready for this change. They've had less than a month to prepare for it, potentially, unless they've been doing work in the background. The administration has given two options for calculation of duties for goods going through the postal network. So carriers or postal operators, carriers using the postal network, or postal services providers themselves, will have to calculate, collect, and remit duties in advance of the goods arriving at US customs. Now, the way they calculate this, they've been given two options. Eventually, everybody will have to use the ad valorem methodology, which is the standard way of valuing goods on import that we use in international trade. But in the interim, there's a 6-month transitional measure that has been offered to postal operators or carriers using those postal networks. And that is that instead of calculating duties based on the kind of cost, insurance, freight, typical way that we would do the valuation, they can instead apply a flat fee. And that flat fee will be based on the country of origin of the goods. So, for example, if there was a postal operator here in the UK that was applying the flat fee methodology, we have the lowest IEPA tariff rate of any other country globally. It's 10%, so it's under 16%. So it would be an $80 flat fee would be applied to that item or to that consignment. This is just a 6-month transition period, so anybody using that only has 6 months to use it, and as of the end of January next year, they have to default to what is the typical way of valuing goods for customs purposes. Just to go back to the ad valorem piece here, so when we're calculating duty on imports, duty is usually calculated on what we call the CIF price of the goods. And in simplistic terms, that is, we take the cost of the goods and we apply the shipping costs, so usually the freight and the insurance. And it's on that figure combined that we charge the duty. So duty is typically charged on the CIF price of goods. Why I'm mentioning this is because there's a little bit of, we find it confusing to read some of the verbiage that the Border and Customs Protection Authority have put out, because they refer to the IEPA duty being charged on just the goods themselves and not on the shipping as well. But then they refer to the methodology as being the transaction value methodology, which we in international trade know that you charge the transaction. If you're using the transaction value, the duty is charged on the cost of the goods and also the shipping. So I'm just caveating it there. I would say where I sit here today, I don't know as of the 29th of August, unless we can find something else that sheds more light on it, or, you know, provides a little bit more clarity. I don't know whether that IEPA duty will be charged on just the price of the goods or on the price of the goods combined with the shipping. So I'm just putting that out there. I'm not sure at the minute. Obviously, if anything comes to light, we will share it with you. I can say categorically from where we are today, having had discussions with Royal Mail will not be using the flat fee methodology. Royal Mail are working at haste to be able to have the systems in place to be able to adopt the ad valorem methodology. So still calculate the duty and the VAT, the duty that's due upfront and pay that upfront, but certainly not apply the flat fee, because that would be cost prohibitive to their customers. You would have some customers using the Royal Mail network that were paying the same amount of duty as the actual goods that they're shipping cost, or the duty might be more than the cost of the goods. So Royal Mail didn't feel like that was something that would work for them. So as of the 29th of August, for everybody, all duties on goods entering the US that would fall under the de minimis threshold have to be paid upfront. UK exporters ourselves, we need to be able to calculate the duties in advance of the goods, and potentially charge our customers those duties as well. Any goods that arrive at US customs that haven't had the duty paid on them, prepaid, will not be cleared and will be returned back to the UK. There are some exemptions. So thinking about postal services, personal correspondence is out of scope, so that doesn't face any duties. Non-personal correspondence sent by Royal Mail and Parcel Force will be impacted, as it will be by fast parcel operators as well. There are some exemptions, so there's up to $200 of personal items that can go with a traveller in their luggage. That's classed as their personal allowance. Similarly, with gifts, they can take into the US gifts up to the value of $100 or less, again classed as their personal allowance. There is talk of other exemptions around books, CDs, records, artwork. We don't have clarity at the moment as to whether they're going to be exempt. We have agreements between a number of us looking at this, that as one of us hears, then we'll inform the other. So as soon as we hear or we get clarity on that, then obviously we'll feed that into. But at the moment, I would just work on the assumption that everything that goes into the US that would have fallen under that $800 de minimis threshold will now face duties. And then obviously, if we find that there are goods that are exempt, then, even better. It's kind of like, plan for the worst and hope for the best. I wanted to provide these landed cost calculations. What does landed cost mean? It means fundamentally the cost to get the goods cleared at customs in the destination country, and we typically say it's the price your customer will pay for those goods. So I split it, okay, because we're just talking about de minimis exemption goods here, and we know that they typically go through either the postal network or they go via DHL and FedEx and so on. So I've given examples of how goods going through each one of these streams would be treated and how they'd be treated for duty purposes. So let's focus on Royal Mail first. So Royal Mail have categorically said that they will not be using the flat fee. Instead, they will be applying the IEEPA tariff, which for the UK, or at least for UK origin goods, I should say, is 10%. So if we take the first example, example 1A, I've given the value of the item that we're shipping is £100. I've chosen a Royal Mail product, their international tracked up to 2 kilograms, which has a price of £8.50. Combined, because we think that it will be that combined, but it might turn out that that IEEPA tariff is just on the £100 rather than on the £108.50, but we've combined it. So the IEEPA tariff for UK origin goods of £100 value would be £10.85. So the landed cost of the goods is £119.35. And then we've kind of calculated the percentage uplift based on, you know, the process of getting the goods cleared in the US using Royal Mail. That particular product is 19% higher than the actual cost of the goods themselves. Example 1B, I've inflated the value of the item, but I have kept the shipping product the same. So what happens is, obviously, because we're talking about a percentage here, as the value of the goods increases, the duty that we pay increases also. But you can see that we've kind of got some economies of scale there because we're shipping higher value goods via the same means of shipping. So ultimately, the uplift in price to get the goods to the consumer is 12% rather than in the 19% for the lower value goods. Now switch over to the fast parcel operators, because as we now understand it definitively, goods going through the postal networks will be treated differently for duty. The likes of Royal Mail and Parcel Force will be allowed to simply apply the flat rate of 10% for those UK origin goods, those goods that have been made in the UK. Fast parcel operators, however, will have to pay what's called the most favoured nation rate in addition to the IEEPA tariff. So the IEEPA tariff, as we know, they are just the tariffs that the Trump administration imposed as of April. That's a new tariff this year. The most favoured nation tariff is what your goods would have it's the duty your goods would have paid or would have been subjected to before all of this started. So that still exists. That's the most favoured nation tariff. And in the US, they're typically quite low. So for this example, I've said, you know, it's 3%. But here, the fast parcel operators have to calculate that most favoured nation tariff and also the IEEPA tariff. So you're paying effectively two lots of duty to send stuff through the courier network than you are going through the postal network. The disbursement fee that I refer to here, this is a cost or a charge or a fee that fast parcel operators charge you. Fast parcel operators are all about clearing huge volumes of goods very quickly. So when they clear at customs, they pay the duty to customs on your behalf, and then they recoup the duty from you or from your customer if you're delivering at place or whatever, and your customer is responsible for those fees. So they charge you almost like an admin or a facilities fee for that. And it's usually between 2 to 3 or 3 to 5%. And here I've put it in at 3%, I think, so it's 68 pence. I think it's typically a bit more than that, but that all adds to the landed cost. So you've got the value of the consignment, the shipping fee, and again I caveat that was a price taken off FedEx's website. I'm sure there's cheaper products, I'm sure there's alternative modes of shipment that you could source. It's just for illustration purposes that I've chosen that. So you've got the value of the consignment, you've got the shipping charge, you've then got the most favoured nation tariff that the fast parcel operators have to charge, and then you've got the IEEPA tariff, which is what Royal Mail have to charge you also at the standard 10%, providing your goods are manufactured in the UK. And then you've got that disbursement fee, so you get your landed cost, which actually equates to almost double the cost of the actual goods themselves. Again, caveating that that £73.95 shipping charge might be considerably lower. I've done the same again. So I've inflated the value of the goods in example 2b. And you can see that in terms of the inflated price that the customer is paying is 30% rather than 97%, but that's largely because they've had the economies of scale of shipping a more valuable consignment via the same shipping product. But you can see that their most favoured nation tariff or their duty rate has gone up, as has their IEPA tariff as well. Okay, so hopefully that helps, because we all need to get our heads around, all of a sudden, maybe we've not had to do it before, but we need to get our heads around how goods are calculated upon import into the US. And to be quite honest, it's a good practice to have. It's good knowledge to have, because it's the World Trade Organization that sets the rules for valuing goods at customs. So if they're valued in a certain way for import into the UK, they should be valued at the same way for going into another country that's a WTO country as well. Okay. So the merchandise processing fee that I mentioned before, this is just for those items that are over $2,500. Okay, it's a kind of it is a processing fee. It's for US border customs protection to process your shipment, your import. As I say, it only applies to those imports exceeding $2,500. They're typically classed as formal entries. They're referred to as formal entries when they're over that threshold. Informal entries are those consignments or shipments that are under that $2,500. It's considered a tax, not a duty, and it's calculated on just the price of the goods themselves, not on the cost insurance freight, or basically the cost of the goods and the shipping of the goods. It's just calculated on the goods. And importantly, it has a capped charge. Conversely, it has a minimum charge as well. So if your consignment just hits the $2,500, you're going to get charged that $32.71. But similarly, your consignment could be massively more expensive, and you have the comfort knowing that merchandise processing fee is actually capped at $634. They can't charge you more as a percentage of the much higher value product that you've shipped. So what are the considerations for us at the moment? Well, I feel like I'm always talking, you must be so sick of me talking to you about the accuracy of everything that we do in international trade. It's probably one of those occupations where attention to detail really serves you well, because we need to get really, really accurate about what we're placing either in our fast parcel operators portals, or what we're inputting into Royal Mail's Click and Collect, or the instructions that we're giving to hauliers and so on. We should be absolutely clear on what our commodity code is for our product. And I appreciate that some of you might not, be that familiar with providing a commodity code, but you need to get familiar with it, essentially. And accompanying that commodity code is a kind of detailed but succinct description, free text description of the product, so that if customs in the US are in any doubt regarding the commodity code, they can compare it with the description of goods, and they can work out what tariff or what duty is actually payable on those. We should only be declaring the goods as UK origin if they really are UK origin. So much of what President Trump is trying to do is to try and stop people from misdeclaring the origin, or perhaps not putting the right value on their goods so that they get under that threshold, and therefore that's fraudulent, right? Because it's bypassing duty payment, and it's not right. And to be honest, you're passing the problem onto your customer rather than you. You need to make a decision as to whether or not you're going to pass on these costs to your customer, or whether you're going to absorb them. I'm thinking that so many UK businesses at the moment are probably not in the position to absorb these extra costs. And also, I would urge you to consider that US customers, be they consumers or business customers, are going to be facing these inflated costs from every country that they source from. So it's not like it's just the UK, it's just UK origin goods that they're facing these fees from, and also UK origin goods with that lowest IEPA tariff rate. You could argue that it might be cheaper to source those goods, those UK origin goods, rather than, you know, from other countries. I mean, there's some countries still on 39% for what we would call just general products. Then you need to, like I say, get familiar with the landed cost of items that you're shipping. Now, Royal Mail and Parcel Force will do this for you. So, and it depends. It's different depending on whether you have an account with Royal Mail, or whether you're just a kind of like incidental user of Royal Mail, you know, and you just use their click and drop service, which will be updated to allow you to continue shipping to the US and pay those duties up front. If you're an account holder with Royal Mail, obviously you get the invoice or the statement every month showing you, you know, the fees that they've, or the duty that they've paid on your behalf. You need to be familiar with how, you know, you need to be familiar with those charges. So I think for every shipment that you make, even though it's on account with Royal Mail, I think you have to understand which charges are being are going to appear for that shipment. Obviously, if you're just using the click and drop service, which will be updated to allow you to prepay duties going into the US as well, then the duty is calculated up front at the point where you book that shipment and where you pay for that shipment to go. So you'll always know whether what you've charged your customer is correct, or what you need to charge your customer if you haven't quite charged them yet. All the FPOs will be updating their calculators on their websites or their portals. So depending on who you're using, you'll be able to see what the duty is going to be based on the information you've provided on the product that's being shipped. Going back to those customers that have an account with Royal Mail or don't have ready access to a kind of like, you know, built-in calculator on their website, there are some free ones that I've listed here. My only concern with those would be, because they are free, that there's no guarantee that they'll be, you know, working on the most up-to-date data. And this whole US trade policy is moving so fast and changing what feels like almost daily, that I wouldn't want you to be basing your calculations on outdated data, if that makes sense. If you've got an e-commerce website, then you can buy a paid for solution like a plugin, so get an API to the likes of Dutify or Descartes. They have duty or landed cost calculators that you can plug into your e-commerce checkout, so that that's visible for your customers and also for you. But we need to get our heads around how our goods are calculated, the duty on our goods is calculated. It for the US, but also it's good practice to know for any exports. As I said just before, I wanted to explain how actually there's very little good news around at the moment, but I suppose if we look at that, the UK does have a lower IEPA tariff than the rest of the world currently. China was at 10% until yesterday, and to be quite honest with you, I haven't had a chance to check on what happened, because that 10% actually came to an end yesterday, or was scheduled to come to an end. So I'm not sure what's happened with that. But generally speaking, we are in a better position from an import tariff into the US than other countries are. Okay. If you're in the position where you're shipping via a fast parcel operator, and you are thinking, well, okay, I know there's the IEPA tariff, but I also know that my goods are going to be subject to the most favored nation tariff as well. You have to consult the US harmonized tariff schedule and look for your commodity code. If you can't, and without giving you a whole training session on classifying your goods, but look for your commodity code. If you can't find totally what you're looking for, look for the product descriptions. Why can't you find what you're looking for exactly? I'll explain quickly. So the harmonized tariff is based on the harmonized system. So the WTO's harmonized system, and that is 200 countries globally subscribe to that system. And effectively what they're saying is that they will classify their goods exactly the same, at least up to the first 6 digits. Okay, so I always use the example of, I don't know why, but if I'm importing aluminium ladders from China and aluminium ladders from the US, the first on those import declarations, the first 6 digits of the commodity code on those declarations should be the same, irrespective of the fact that one came from China, one came from the US. On import, the last 4 digits are assigned by the country itself, and it's usually for statistical purposes to be able to map the trade, the flows of trade that's coming into their country, basically. So in the tariff schedule for the US, you should be able to find at least the first 6 digits match your export commodity code. And then obviously the last 2 to 4 digits are going to be different, but you should be able to find the description that accompanies the commodity code, so you can check that way. I think, like I said already, US consumers and business customers are facing inflated costs, irrespective of the origin of the goods and where they're sourcing them from. So I think in some respects, maybe we're in a slightly better or a more competitive position. So as with all of these, every webinar that I get on and talk to you about, I'm always talking to you about, don't make any knee-jerk reactions. Don't, this isn't going to be in place for forever. And there is tons of information out there, whether it be related, lots of market research data related to trade wars and economic downturns. And it proves time and time again that those businesses that choose to break those barriers down or circumnavigate those bumps in the road are the ones that come out strongest when kind of normality reigns again. So really, the whole purpose of us doing these webinars and finding out the information that you need to know is because we want you to continue exporting. We don't want you not being able to serve your US customers. Countries with high de minimis thresholds. So linked to what I've just said, actually, in as much as we don't want you to stop serving your US customers, we also want you to expand beyond that as well, right? So we should never put our eggs in one basket. The beauty, the absolute beauty of export is the fact that you spread your risk. So as one route to market becomes a little bit dicey, like the US, or you have, one economy not doing particularly well and the disposable income is kind of impacted by that, then you spread your risk because you can increase your sales to other markets. So I just wanted to reference here that, okay, the US has had the highest de minimis threshold at $800. I don't think we'll see that returned again. But there are other markets and English speaking markets as well, because some of you cite that, the cultural barriers and the language barriers can sometimes be a bit overwhelming. Australia, New Zealand, we have trade agreements with them. Singapore, we have a trade agreement with Singapore. So you're not just, removing the whole duty side of things, but there are also the trade between both parties is simpler, and there are established agreements on how products and services from going from one region to another are established. So think about this as I don't know, maybe I'm just overly optimistic about export. I don't know, but I just think that, when something becomes a little bit more challenging, that's the beauty. The world is a big, big place. It's a big market, and there's still so much opportunity for UK products and services that, if the US sales drop off a little bit because, customers can't afford to pay those inflated fees, well, then let's explore other markets. So I just wanted to put those de minimis thresholds in place. Obviously, Russia, we know that there are big sanctions in place, so it's prohibited to ship any goods or services to Russia. So, I've mentioned it there, but let's not be exporting to Russia anytime soon. Now, to go into more detail about Royal Mail and Parcel Force. So as I said at the beginning, I have it on excellent authority from Royal Mail senior management themselves that they are not applying the flat rate methodology to calculation of goods. They are working at warp speed instead to be able to deliver the ad valorem method. Their view on it is that for some of the value of the actual goods that go through their network, if they applied the flat fee methodology, their customers would be charging their US customers more duty than the actual product was worth in the first place, which, you know, is understandable. So what Royal Mail are doing is they have existing international products, as they call them, or international services. They're going to be adding to those, but the most important thing is they are going to be, in light of Brexit and the fact that we had this big VAT issue to deal with in the EU and we're shipping to consumers, Royal Mail, in response to that, created their Postal Deliver Duty Paid product, their PDDP product. And you can now send things via PDDP to between 10 and 12 EU member states. And that means that Royal Mail calculate upfront the duties, they pay the duties, they pay the VAT, and it kind of reinstates the customer experience that we were able to deliver to US consumers before Brexit, where they just took delivery of the goods. They didn't have to pay anything to customs to have those goods cleared. Royal Mail is extending that PDDP service to the US, and it will be available to Royal Mail customers and also Parcel Force customers. In fact, what we're going to see with Royal Mail is a lot more a lot better use of those both kind of networks. So they're going to start pushing, even if a small parcel was booked by a Parcel Force, it will probably go through the Royal Mail network, and similarly a large parcel booked through Royal Mail will start to go through Parcel Force, because it's just a lot better way of working. You yourselves won't notice anything as the customers, but it's just it's streamlining a lot of their operations. Now PDDP will be available to, like I say, Royal Mail customers and Parcel Force customers. Now, how you access that will depend on whether you're an account holder with Royal Mail or whether you're a non-account holder. So an account holder will have will be able to contact Royal Mail and ask for the PDDP service to be added to their portfolio or to their account. If you have shipped to the US over the last 6 months, then they will add that to your account automatically for you to be able to select, so you won't have to contact them. If you don't have an account with Royal Mail, then they are working at haste to update their click and drop service, which will mean that you can select PDDP via that route. So you'll access the click and drop website, be able to send via PDDP. It will calculate the duties up front. You'll pay them. That allows you to either drop the parcel off at the post office or arrange for Royal Mail to come and collect it, whichever. But the important thing is your duty will have been paid before the goods actually leave the UK, never mind arrive at UK customs, so they should clear swiftly. I think probably in anticipation of more heavier consignments going through the postal network, given the fact that the postal network is subject to the IEPA tariff and not the IEPA plus the MFN, they're going to facilitate heavier packages to go through their network. So they're introducing 2 new options for tracked heavier. And they're working with all of the platforms that some of you smaller businesses rely on day in, day out to sell your goods, the Etsy's, the eBays, and so on. They're working with them at haste to make sure that those platforms can access PDDP, hopefully before the 29th of August, if not then very swiftly thereafter. Country of origin, I'm not going to labour this point, but since I've told you that it's something that I really want you to get a handle on, then I think it's only fair that I go through a couple of slides towards the end of the deck. So country of origin is not country of export, and I think the message is getting through to a lot of companies now, because it's been talked about so much more. Country of origin is, let's go through the 2 criteria here. So there are really 2 criteria that are considered when you think about the origin of products. They are where they're wholly obtained in the country, or there's been sufficient transformation done to a whole load of ingredients or component parts in that country to be able to say actually all the manufacturing was done here, so therefore it's UK origin. So examples of wholly obtained products would be cattle that have been reared in the UK, obviously UK origin, crops that have been harvested in the UK, obviously UK origin. Substantially transformed is a little bit trickier, right? Because we are in a global supply chain economy now where we buy component parts from here, we assemble them there, we send them there for finishing. It can get really, really complicated. Because there's no trade agreement, a free trade agreement between the US and the UK, there's an argument that says that the rules around conferring origin are a little bit looser than they would be in a free trade agreement where you have product specific rules and you follow exactly for that product. But it's usually the last place of substantial transformation. And there's that word is substantial transformation. That word is substantial. So where you've taken ingredients or component parts and you've changed them into a different product, that's substantial transformation. If you've just taken Chinese, say, component parts and just assembled them, there's an argument there that would be questionable whether or not you've done enough to confer UK origin. Now, I've given some examples here, so I'll move on to the next slide that might help make it a little bit clearer. So again, just examples of products that are definitely wholly obtained, so therefore can confer origin. And then this example I have been throwing out for years. I love it. This is an example of where component parts have been bought outside of the UK. So leather from India, zips from China, fasteners from Taiwan. But those component parts went to make the finished product, which is manufactured in the UK, and that's a suitcase. And even though the large makeup of that suitcase is made up of the leather from India, the fact is you've substantially transformed those originating parts into a finished product. And you've basically met that rule. So you can definitively say, these goods are of UK origin, I'm exporting them to the US, therefore I'm selling them via the postal network, and they will only be subjected to the 10% IEEPA tariff because they are of UK origin. When I talk about substantial transformation, there's also this notion of insufficient processing. And this is linked back to, if you've got all those Chinese component parts and you're just assembling them. Grated cheese, so cheese sourced from the EU, but grated in the UK, the process of grating hasn't done enough to change the cheese. Okay, it's still cheese. Similarly, nuts that are sourced from the EU, the process of shelling them in the UK, you haven't done enough to confer UK origin because they're still nuts. They're shelled nuts, but they're still nuts. Okay. And I'll skip that slide. Anybody can take a look at it if you want to, because I want to move on to some questions. So I am going to stop sharing my slides if I can, and I'm going to move to my questions, which I did have them somewhere, she says. Yes, because we had some really good ones. We asked you all to kind of like drive the content, and then we had some post the webinar as well. So how do we check the duty rates? It seems that the USA don't have the exact same codes as us. Theirs are shorter. I don't know about the shorter. When we're exporting to the US, our commodity codes are usually 8 digits long, and import commodity codes are usually are always 10 digits long. I think if somebody's looked at the US tariff, then they're maybe just looking at the first 6 digits or 8 digits. But anyway, you just as I said earlier, you try and find the closest to the code and then base it on the product description after that. And you can 99.9% of the time you can find your the US import commodity code that correlates directly to the UK's export commodity code. What tariffs will be charged, plus 10% on top of what? Is there a reliable way to know what tariffs will be applied? Well, hopefully I've answered that. Depending on whether you're pushing goods through the postal network or whether you're sending through the fast parcel operators, we've broken that down, so hopefully you can see that. We have apparently for the first 6 months the choice of either applying the appropriate tariff or a 60 £60 flat fee. Who makes the decision? So I can categorically reiterate the fact that Royal Mail, and we've only just kind of like had our meeting with one of the senior managers that's leading on some of this. They are not going to be introducing the flat fee. They are working at haste to be able to use the ad valorem method. So you'll have that build-up method of duty. Really excellent question on how it works if you're sending work for an exhibition on a sale or return. There is in customs the notion of temporary import, and we see it sometimes on for galleried work or goods that have entered the country to be displayed but have the potential to be sold while they're there. I don't know, and it would need to be checked, but we would certainly permit it here in the UK if we had goods coming over to the UK that were going to be displayed for an exhibition or in a gallery or something. Then they would be subject to that temporary import, which is valid for 2 years. If during that time those goods are sold, then that's when that duty becomes payable. So that's where you have to account for that duty. And there's different codes that go on the import and the re-export documentation to show that, but temporary import would be a good one to use. We had a lot of very concerned, understandably concerned clients on the call yesterday when we were talking about the flat fee with Royal Mail, understanding that if they ship a greetings card, a bespoke greetings card that might retail for under £5 and they're charged the flat fee, that would just be prohibitive. So hopefully we've cleared that up now. So if your greeting card was retailing for £5 by the time you've added the IEPA duty, even if it's charged on the card and on the shipping product from Royal Mail, you're still under $1 in terms of your duty. So hopefully that's a lot more palatable for you and for your customers. Somebody's questioning about whether or not Royal Mail have the time to get their ducks in a row before the 29th. So I can say from the information I've been given that account holders will have access. Account holders will have access to PDDP from the 29th. There might be a slight delay on the click and drop service being updated. They don't know, they can't say right now, but there might be a slight delay there. So once we've got more information and they're updating us, then we'll obviously share that with you. Country. So Royal Mail's verbiage is a little bit confusing. Senders in the UK will have to calculate, collect, or account for duties at the point of sale. The duties are payable to US Customs in advance of items entering the US. We understand required duties for UK postal shipments will be based on an item's value and the country-based tariff, country of manufacture rather than shipping. I think that's just Royal Mail saying that the country of manufacture is the country of origin rather than the country of shipping. A bit like I said, the country of export isn't the same as the country of origin. So you might have imported goods from China into the UK and you're subsequently exporting them to the US. You haven't done anything to change the origin of those goods. So therefore, they'll be subjected to the Chinese IEPA tariff on entry into the US. And that's really important to know. I send specialist books worth about £20 each to customers in the US via Royal Mail. I fill in the customs details, HS code and so on. If books are indeed exempt, can I just continue doing this as I have been? So as I said at the beginning, we're really not sure about books. We're awaiting further clarification. There are rumours that books will be exempt. You would carry on filling out your paperwork as it does. When the goods, what happens is within Royal Mail's system, they will have the correct duty to apply to the correct commodity code. So their system will see that you've input a commodity code and a description for books, and therefore it will assign a 0 rate of duty rather than a 10% rate of duty if indeed they are exempt. So you just carry on doing what you're doing. I just wanted to check one point for clarity. My understanding from the US harmonized tariff schedule is that original works of art, such as paintings, drawings, collages, and so on, carry a 0% duty rate regardless of age. The 10-year rule seems to apply only to antiques or book undercoat. Yeah. So even products that before April carried a 0 rate of duty going into the US, they will still be subject to the IEPA rate of duty of 10% if they're UK origin works of art, unless they are specifically mentioned as an exemption. So similar to books and records and CDs, we're waiting for further clarification on artwork. But just because the most favoured nation tariff that we were using before the administration's measures back in April and to date, just because that was 0 rated, it doesn't exclude them from the IEPA tariff unless they're listed as an exemption. So I think my answer to that is they would still be subject to the 10% unless we hear different. So I think always plan for the worst and hope for the best is again my motto. So I think based on that, that is basically everything from me this afternoon. I think the one thing I would say is that we are increasingly receiving a lot of requests for support and ad hoc questions, which one or two obviously we love to answer because we're here to support you. But in the volume that we're getting them, it is just we can't continue servicing everybody at that level. So we are going to be introducing some kind of support packages or subscription packages that allow you to pose those questions and get quicker turnaround times, because at the moment we're having to try and address those questions in between our paid work for our standard clients, if you like. So watch out for more information on that. I'm going to be uploading this webinar to YouTube. If you can like and subscribe to our channel, that all helps what we're trying to do around supporting those sole traders and micro businesses, because ultimately, and small businesses too, because sometimes they're the ones that fall through the cracks and yet are no less deserving of detailed and up-to-date and good information as some of the bigger boys are. So at that, I will let you go and enjoy the rest of your day, and I'll see you at the next webinar. Okay, thanks everyone. Bye bye.